Thank you. We're sitting here with Dontrae Withrow of Withrow Financial Group.
Yes,
Did I get
sir.
that right? That's
Yes,
it.
sir.
Okay.
Yes, sir.
Okay. And I first met Dontrae actually through a men's group that we were doing at the time. And this brother came in with some hard financial information, stuff that made me even question my financial decisions in the past and moving forward. So we thought he'd be a good person to bring on so he could share some of his financial, wizardry with all of us.
Hmm.
Um, so I'm not really big on intros, but I want to say welcome again.
Thank
Is
you.
there anything you want to say before we get into it
Yeah.
about what you do?
I just want to say thank you to Eshu and James for inviting me. Insurance is what I'm very passionate about, but also educating the public as well of the many benefits and powerful resources that life insurance um, can build if we utilize it in the right way. I call it assets over liabilities. And so, again, my company is Withrow Financial Group. You can follow me on Facebook, Withrow Financial Group, and also my personal page is Dontrae Withrow on Facebook, and then also on Instagram as well.
Okay. What are some of the benefits of having a whole life policy versus term life?
Okay, so I just wanted to kind of uh, give a little definition of what both are. So, term insurance is basically self-explanatory, like a term. So, a different period of time. So that could be a 5-year term, a 10-year term, all the way up to 30-year term. Has no cash value, um, and after that term is over, you have to renew the policy. So as you get older, the policy gets more expensive, right?
Mm-hmm.
And it is cheaper because it has no cash value inside the policy, so that makes it more lucrative. But it does have a benefit as far as me and James were talking about mortgage protection.
Mm-hmm.
So let's say you have a house, you just bought a house. Now you can get mortgage protection through the bank or
Mm-hmm.
the lender. Um, and but the thing is, if you were to pass away, where's that money going?
Right.
The money's going back to the bank, right?
That's
Instead
it.
of going to your family,
Who needs it?
your kids,
Mm-hmm.
right? Um, and so your money's gone after that term is over. Your money's gone, right? So on the other hand, whole life, which is a permanent policy, so very self-explanatory, whole life all the way up to age 120. So basically your whole life has cash value. So depending on each insurance company, that could be 4, 5, 6, 8, 10%, right? So you have a fixed rate, and it accumulates cash over a certain amount of time, right? And so it
Just
was
by paying your regular premium.
just by paying your regular premiums.
Okay.
But also, not only that, you can dump money into this policy. So that's why the rich were so it was so enticing because what most of the rich they don't want to pay taxes. So it's a tax-free shelter. So they were dumping money into these policies until the 80s. Of course, Uncle Sam said, "Hey, you're throwing millions of these dollars in these policies and not
Mm-hmm.
paying taxes. Hey, we got to limit how much money that you're putting into these policies." So that's where they came up with the MEC system and the 7-day pay test. That is a test that insurance agents have to use to see how much money that you can put into a policy. So you can't just dump money into that policy without paying taxes like a IRA,
Mm-hmm.
401k, things like that.
Yeah.
So there is a balance. So
Okay. So we see the tax benefit. So,
mm-hmm.
um, what would you advise, or for someone young? I know when we had that conversation, the
Mm-hmm.
first thing I thought about was my kids.
Mm-hmm.
Had I placed whole life policies on them when they were born,
Yes.
and what type of situation they would be in. We recently looked at a chart about and
Mm-hmm.
some figures, and a 20-year span on a whole life policy was extremely lucrative as far as the money you have
Yes.
access to.
Yes. And so, like, I have two daughters, right? So I want to be the person leading up. If I'm telling you to get a policy, I want to be in the front. Hey, I got one too. So I have two policies on my daughters. Me and my wife, we put $100 into those policies, and so Kalila, the baby. So when she turns 18, she'll have $256,000 of cash value in her policy. So one, I still own the policy. So like, let's say in year 10, hey, I see a property that I want to purchase. Hey, I'm going to purchase that and put it in her name. Right? So assets over liabilities. So when she turns 18, let's say, hey, Dad, I don't want to go to college. Right?
Right.
I want to go to trade. I want to go to trade school. I want to do this or whatever.
Whatever.
So she has a house. So she's starting ahead.
Yeah.
Compared to being in debt and not starting on the right foot.
Just having options, even
yes.
if without the even if the cash value could pay for education. So
yes.
That's what I was thinking
yes.
when you first said it.
Yes.
What if it pays, even if you, whether or not you want to go to college, just like
yes.
whatever decision I'm going to make to educate myself or further, I've got a kind of a push. I got something to start out with.
Yes.
Even if your dream is whatever, start a production company.
Yes.
Or
exactly.
do whatever, right? Whatever it is you decide to do, you have the capital just to kind of jump right into.
Exactly. And so
financial freedom is what we're talking about.
Yes. And having the options. I was actually talking to my oldest today. There was a house that was being built, and the guy that was building the house, he's building his own house, and he went through trade school and he did the right things, and he's only paying $147,000 for a $230,000 house after it's built. So he has the freedom. He's paid for his kids' college and everything like that. So like you were saying, having those options, not having to be kicked out at 18, right?
Right.
So in the Black community, we're always at,
you hear it.
Can't wait till you turn 18. Hey, you got to get in my house, right? So let's say they say, hey, I don't want to be in the house at 18, but they have these policies.
Right.
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 Okay. Yeah. You want to be out? Here's $10,000. Here's $10,000. Go get your apartment. So.
Well, you're also teaching at the same time. Just by showing that example, that's what they're going to carry on. When they get in these situations as they get older, which we're talking about 18, 19, 20.
Yes.
Really, they're right there.
Yes.
To start your cycle. But imagine starting the cycle of being a parent or whatever they decide to do, career, and having all this extra information.
Exactly.
Just being armed with that. And this is what is a big subject, and we know it is. We talk about, once again, Black communities, poor communities, where the information is not readily available. The amount, you talked about this a lot before, the amount of money that Black people are spending in this country versus the ownership.
Yes.
Uneven.
Yeah. So the consumer power in the Black community, we could be the ninth I guess you would say the one of the top countries in the world if we had our buying power, right? But we are on the bottom when it comes to ownership.
Yeah.
And so there's a huge disconnect, where we're not saving money, so we're putting ourselves in a bigger instance of being left out high and dry. In war, you need to have a shield, to be able to do battle. And we as a community, we can't do battle because we don't have the right resources and the right shields around us,
right,
to help us fight this fight that we're trying to
defend, let alone make change.
Yes.
But even to defend the situations,
exactly.
It's like, I know we were talking a few minutes ago about how we were talking about gentrifying neighborhoods, and property values go down. Let's buy it up, fix it up.
Yes.
If you're opposed to that type of situation, what's your counter? What's your plan, as you said,
Mm-hmm.
in order to address what you know is going on? Like, build up your own communities.
Yes.
This is easier said than done.
Yes.
I know this. I know
Yes.
this. But that's why these things happen. It's kind of a natural progression. You want
Mm-hmm.
the area to be quote unquote fixed up,
Yes.
and where but as a result, the people that have spent so much time and they get pushed out.
Yes. Well, and I think also too, education, what we're doing now is so important, but not only education, application.
Mm-hmm.
Um, we see that even on social media as an agent, you see all these agents on here, glorifying but not giving the right information.
Mm-hmm.
So they're hearing one side, they're hearing, term, you know, whole life is terrible, get term. Then you got over here, buy whole life, term is bad. If you're educated on both, right?
Mm-hmm.
So whether you're buying a whole life or term policy, both have good benefits. But we as agents should educate our clients, taking the time to slow down.
Mm-hmm.
Hey, we may not get the sale in the first time, right? It maybe take us 2 or 3 times. Let that information click, you know. Then when the client feels like, okay, I understand this policy, then we can move forward. Now I can teach it to my brothers, my sisters, nieces, nephews. And that's where I feel like that's where we can start changing neighborhoods, because if you had, let's say, this neighborhood like this, and let's say everybody on this block had a policy, right?
Mm-hmm.
And they said, okay, there's a house, let's say down the street, that's dilapidated. Instead of letting that outside investor come in and purchase it,
Mm-hmm.
hey, let's all get together, purchase this property. I'll put in 10, 15, 20, whatever. And now we all have a piece of the asset,
Mm-hmm.
and now we've protected our neighborhood.
Yeah, with ownership.
Yes.
Because I was thinking, what information do we need to be imparting to our kids
Mm-hmm.
about making sound financial decisions
Mm-hmm.
as soon as you're able to start managing money?
So actually, I had this conversation with my oldest daughter, 13.
Uh-huh.
Right. So you can start out with what they call a custodial Roth IRA,
Yeah.
and during the summer or whatever, if they're trying to do some summer jobs. Um, I don't know about you, but I want my kids to learn about work ethic. It seems like it's getting less and less as generations are coming up. So definitely, that 25 to 50 or $100, instead of spending it, putting into maybe the IRA, or 13, 13, 14, they can start opening up a credit card,
Mm-hmm.
or be an authorized user,
Mm-hmm.
right? So maybe not give them a credit card to spend, but maybe put them on as an authorized user. And by the time they turn 18, right, they have a perfect credit score.
Okay.
So they're able to, let's say, they get a car, and you get a car in their name, right? Real low, or even a zero interest rate, so they're starting off on a good path,
Financially,
financial path.
Yeah.
And just basically, give them books to read. There's certain books out there. Right now, me and my daughter are reading the Retirement Miracle by Patrick Kelly.
Mm-hmm.
And that's introducing her to the Index Universal Life Policy and the benefits of that. So as I'm being an agent, if she's watching me helping other people in their financial journey, that's intriguing her on, hey, what is this, what is that,
Mm-hmm.
and when you're walking your kids through those processes, I feel like it sticks at a young age, and then they can
And they
apply
pick up
that.
on it quickly.
Yes.
That part too. Like you're
Yes.
doing something when you're younger. By
Mm-hmm.
the time you're,
Yeah.
oh, it's already it's like it's there,
Yes.
and they
Exactly.
can just only build off that even
Mm-hmm.
further.
Mm-hmm.
What has what about your life and the life you've lived? How does that tie into being so passionate about this information, or just doing what you do?
Okay.
How does that factor into something personal, or have you always been passionate about stuff like this from a
No,
youth?
no. So, how I got into life insurance was an unfortunate event. I lost my sister in 2021, and actually, so I was adopted. Actually, I lost my grandmother in 19. I lost my birth mother in 20, and then I lost she basically my twin sister in 2021.
Yeah, and we've
Uh,
talked about it. You know
yeah,
what I'm saying?
yeah, and issues helped me, and I know Troy's not here, but
Yeah,
it
shout out
helped.
to Troy Burks.
Yeah, and so lost her in 21 and devastated. Dark time. So fast forward, process going. My mom, my aunt. Thank God for her. She saw forefront knowledge to get a policy on me and my sister. And so the person who was doing her policy um, was asked, "Hey, you know anybody that wants to get insurance?"
Mm-hmm.
So my mom, who's my aunt, said, "Yeah, my son would," and and she calls me and said, "Yeah, somebody's from so and so life insurance company is gonna call you," and I'm like, getting insurance. I'm
Right.
like, I just lost my sister, so fast forward, started out with this company, only sold term insurance, and people were interested, but
Mm-hmm.
that a lot of people um, gravitate more toward the whole life because um, as I'm learning in being an agent, people want to see where their money's going,
Mm-hmm.
right?
Like, a lot of times in our communities when things happen, people die, and property gets passed around, it
Yes,
doesn't always get passed down, so it gets
yes,
liquidated,
yes.
and things that could have value in the future. So how do
Mm-hmm.
we get away from those pitfalls? How do we get people to understand that we understand? Look, if you're in a press financial situation, it's really all
Mm-hmm.
about that.
Yes.
But how do you keep it to where knowing that, hey, this property is gonna be, this is family property.
Mm-hmm.
Let's keep it in the family.
Mm-hmm.
We know it's gonna have value.
Mm-hmm.
What if somebody needs some place to live? All these things that also cross people's minds when they think about,
Mm-hmm.
we keep the house in the family.
Mm-hmm. So I'm actually just finished with a five siblings. Five siblings. Their dad did not have life insurance. Um, so they father's 70 years old. They have a big piece of property
Mm-hmm.
in South Carolina, and they all got together and bought what they call a mortgage protection policy, which is a term policy. So basically, let's say you had 15 years on left to pay off the house,
Mm-hmm.
you would get a policy for maybe if all or a portion of whatever the house is worth. So the person passes away,
Mm-hmm.
insurance company writes you a check for whatever's left.
Okay.
So let's say they had $90,000 left and he got a policy for 300,000, well, whatever's left goes to the loved one. So now house is still in the family,
Mm-hmm.
right? So they don't have to sell it, and then also they know have that peace of
Just
mind.
some capital. Yeah.
Yeah, so they have capital at the end.
Okay.
Yeah.
I mean, is there anything that you want to talk about?
Um, I know. I know.
You
Me and
touched on infinite banking.
James,
Yeah.
we got on to income protection or annuities. A lot of people, especially for 40 and up, right? We don't want to leave. We don't want to leave them out as well. So I know a lot of people have 401ks,
Mm-hmm.
right? And they're being very disappointed or being awakened to the fact that we've been duped when it comes to 401ks. We've been told, my mom, she told, oh, if your company's giving you the match, you need to put all your money in
Match it.
401k.
Or they, yeah.
But there was a study that came with statistics that came out that only the median average of a 401k is 70,000. So by the time you were to go into retirement, the average person is only $70,000.
Not enough.
Nah,
No.
not enough.
No. Because you think at that point, that's like at that point, it should pretty much be a year's salary.
Yeah.
I mean,
Yeah.
just if on average.
Exactly.
At that point, at the retirement point, that's like you get a severance package for 1 year's salary.
Yeah.
For the rest of your life.
Yeah.
Like, no.
Yeah.
We know off top it's not enough. I mean,
Exactly.
you're thinking it's 700,000 enough. So that's
Yeah.
a good point, and a lot of people don't talk about that.
Yeah.
Putting your money where it can grow.
Yes.
And benefits you.
Yes.
So, yeah, this is very powerful information. I definitely appreciate you. I don't know how we doing on time. We're doing awesome. Okay, because we can go on and on with this conversation. I'm not trying to, so I want to make sure that you got all your points across.
Yeah, I mean, I've gotten mostly. If you're interested in a policy, feel free to give me a call, 864-541-5633. Again, Withrow Financial Group. You can hit me up on Facebook, set up a consultation, and definitely we'll meet you where you're at. Like I said, we're just using these general numbers. Don't mean you have to have $20,000. Starting out at $15. $20, whatever. Just making sure you're getting these things in place so that when that time comes, you're not left holding the bag.
Yeah, the concept is just making sure that you are setting yourself up for the inevitable, which is the future. So we should plan on being here. We already know here today, gone tomorrow, but don't let that be the mantra. Make a decision to benefit the kids. Yeah, so I don't really have much more. I mean, I appreciate you coming out.
Yeah. Oh yeah.
You gonna hang out for a little bit?
Yeah, I'm gonna hang out, and
all right.
We'll chill.
Once again, thanks again to JF Mitchell.
Oh yeah. Yes sir. Yes sir. Yes sir.
Make it days possible. He got the nice arrangement going on.
Yeah. He got a nice setup.
Last interview, we was last interview, we was in there killing it.
Yeah.
Over here, I ain't even had nothing.
Yeah, get a strawberry.